Do you think it is possible for Tesla stock to reach $10,000? Well, according to Chamath Palihapitiya, it will happen soon. Of course, other experts have different thoughts on this matter, but if you want to find out what Palihapitiya has to say, you probably would not want to miss this info. Chamath Palihapitiya once said that the Tesla stock has a bright future and will be worth double and even quadruple in the years to come. He said this is in line with Tesla's current standing in the stock market. Chamath Palihapitiya is a Sri Lankan-born Canadian and American venture capitalist, engineer, SPAC sponsor, founder, and CEO of Social Capital, and was an early senior executive at Facebook from 2007 to 2011. CNBC describes him as the founder and CEO of Social Capital, whose mission is to advance humanity by solving the world's hardest problems. Social Capital was founded to invest in companies in fields being ignored by other venture capitalists like health, financial services, and education. The firm has since expanded to invest in tech companies like Amazon, Tesla, and Slack. Before we go on, Moomoo developed a new function, the industrial chain. Suppose you want to find out the stocks that have the potential to fluctuate in the upcoming days or months. The industrial chain will help you a lot. It provides a detailed picture of the trending industries such as semiconductors and EVs. You can quickly find stocks either upstream or downstream, which helps you focus on target segments of an industry more quickly. Also, as segments are related to industries, you could predict price fluctuations faster without reading many research reports to determine the relationships within one industry. Link in description. In a previous interview with CNBC through Kelly Evans, Palihapitiya said that Tesla's incorporated trade idea, which is the 5-year convertible bond that allows 95% of the potential upside of equities while having the negative risk of a bond. According to him, he sees this as a call option for one of the world's most successful businessmen. He added that when he started buying the said convertible bond, it yielded 5.5%, and further stated that he is willing to bet on Elon Musk, Tesla CEO, as he considers him a friend. However, evidence shows that Palihapitiya is a solid investor and is not the type to place a bet just because of a close friend. This can be interpreted as him trusting the potential of Tesla stocks rather than just his friend Musk. Palihapitiya, along with other experienced and established financial experts, believe in the Tesla brand's value as well as its potential to surpass expectations. In fact, they believe that Tesla is well on its way to proving just that. After days of being in the red, the stock price trading value has now become solid. It is showing positive numbers to the delight of its holders. Palihapitiya, an ardent supporter of Tesla, stands firm in his bullish position on Tesla stock, despite having several investors losing faith and selling off their shares. He even participated in a sell-off several months after a bright forecast for Tesla. Although Palihapitiya sold his Tesla stock in 2021 when the stock started to peak, it can be noted that earlier this year he predicted that the electricity utilities would be severely disrupted and that trillions of dollars in bonds capital expenditure and value were resting in the world's energy generation infrastructure, which according to him will be turned upside down. If this doesn't happen, Tesla will double and quadruple again. Tesla is a clean energy firm that will possibly overpower the fossil fuel industry, which will eventually allow Tesla stock to overperform, allowing a much bigger opportunity to make its way up to $10,000, according to Palihapitiya. This then makes people wonder why he sold his Tesla stocks later that year. Like other investors, some questioned if he lost his faith in the brand. He answered this, which may or may not be construed as an agreement or denial, saying that he did this to move his money around and not have an endless supply of cash. He further explained that he sold his Tesla stock to invest in other businesses and that he thinks of an idea and proceeds to formulate a plan to fund them. Today, the market for fully electric vehicles is continuously growing. The reasons are many, including new regulations on safety and vehicle emissions, technological advances, and shifting customer expectations. But much of the mainstream acceptance and excitement for electric cars can be attributed to Tesla and its unique business model. Since the beginning, Tesla CEO Elon Musk has been clear with his vision for the company. Musk shared that Tesla's mission is to accelerate the advent of sustainable transport by bringing compelling mass-market electric cars to market as soon as possible. This mission is the backbone of Tesla's successful business model. Tesla's business model is based on direct sales and service, not franchised dealerships. The EV company's business model also pays particular attention to rolling out charging stations, which may be the biggest obstacle to the mass adoption of electric vehicles. Also, Tesla has stretched the business model to encompass energy storage systems for homes and businesses. Tesla notably took a unique approach to establishing itself in the market. Instead of trying to build a relatively affordable car that it could mass produce and market, it took the opposite approach, focusing instead on creating a compelling car that would create a demand for electric vehicles. Once Tesla established its brand in the market and had produced and delivered its concept car to the marketplace, it reinforced its business model. Tesla's business model is based on a three-pronged approach to selling, servicing, and charging its electric vehicles. Unlike other car manufacturers who sell through franchised dealerships, Tesla sells directly to consumers. It has created an international network of company-owned showrooms and galleries, mostly in urban areas. By owning the sales channel, Tesla believes it can give an advantage in the speed of its product development. More importantly, it creates a better customer buying experience. Unlike car dealerships, Tesla showrooms have no potential conflicts of interest. Customers deal only with Tesla-employed sales and service staff. Including the showrooms, service plus centers, and service facilities, Tesla has 823 locations around the world as of May 25, 2022. Tesla has also made use of internet sales where consumers can customize and purchase a Tesla online. In some areas, Tesla employs mobile service support, formerly called Tesla Rangers, mobile technicians who make house calls. In some cases, the service is delivered remotely. The Model S, for instance, can wirelessly upload data so technicians can view and fix some problems without ever physically touching the car. Furthermore, Tesla has created its own network of 30,000 plus global superchargers where drivers can charge their Tesla vehicles in about 15 minutes for a quarter of the price of gasoline. Evidently, the purpose is to speed up the rate of adoption of electric cars by making it cheaper and easier to keep them running. Many financial analysts and investors see Tesla as a technology company rather than a car company. At least, that's how they justified the growth of its stock price starting in 2013, when it shot up by more than 300% within a single year. Publications have been trying to find similarities between Tesla and companies from the technology sector, which had similar growth rates. Back then, Morgan Stanley analyst Adam Jonas, who has been a Tesla bull since the company's early days, gave the stock a price target of $103 at full maturation. By May 25, 2022, Tesla was trading at $661.58. Go to Moomoo to see exactly how Tesla stock will perform. Link in bio. Of course, there are several points of similarity between Tesla and the tech sector. Tesla has embraced the disruption credo of the tech sector. Much like other tech companies, Tesla is intent on changing existing business models within the stodgy automotive industry by selling directly to consumers. Its product pipeline and founder evoke a loyal following similar to those of iconic tech companies such as Apple. Like investors in many technology companies, Tesla investors stayed patient through a long period of quarterly losses, and they were finally rewarded when Tesla recorded its first yearly profit in 2021. The biggest obstacle to the mass adoption of electric vehicles is that it can't happen without the infrastructure to charge on the go. That said, Tesla plans to continue adding to its network of supercharger stations in the US, Europe, and Asia. Although Tesla did not invent the electric car or even the luxury electric car, Tesla did invent a successful business model for bringing compelling electric cars to the market. Part of the strategy was building a network of charging stations to solve one of the greatest obstacles facing the adoption of electric vehicles: refueling on long trips. Tesla's unique business model, which includes keeping control over sales and service, is one reason its stock has soared since its initial public offering. Overall, Chamath Palihapitiya believes that Tesla will go more than 10x from here, since the company was able to maintain its standing as a leading manufacturer of electric vehicles, or EVs. Although it was mentioned that some investors, including Palihapitiya himself, sold their Tesla stocks, other established and experienced analysts and investors stand firm in their belief that Tesla remains bullish. Not only was Tesla able to defy the odds and continue to rise despite the pandemic, but it was also able to hold the leading place in EVs, according to Mark Delaney, a Wall Street analyst at Goldman Sachs. Subscribe to this channel to reach more Tesla stock content.